perpetuity, right? That same Atlantic article finds that if companies devoted financial resources to workers rather than shareholders, companies like Lowe's and CVS and Home Depot, they could have given employees a raise of $18,000 a year each. It's a lot. For more on the pros, and there are pros, and the cons, I spoke with Ryan Khurana. He's a technology and policy reporter with Young Voices, and he has a pretty textured view of all this. Ryan, when you start talking about stock buybacks, it is hard to get anyone to say, oh, wow, tell me more about that, because people just don't think it applies to them unless they're ultra wealthy. Why should they care?
Well, if you're an investor, well, everyone can be an investor, right? You could just buy a share on the market. This is a great way for companies to return value to shareholders without making a commitment to give dividends. When they have a windfall of cash, they can return it to you. The stock price goes up a bit. This is great for everyone who is investing. And it's really important for people who are thinking about savings or investing for their retirement to care about how the market works, how they can get money, and how public policy is affecting the way that their share prices go up.
Why would I care if I'm an everyday worker?
Well, from your perspective, the share buyback itself doesn't do much, but it's about what it does for the wider economy as a whole. This is injecting money back into people who are investing's pockets, and they have that money to reinvest in other applications. Share buybacks prop up stocks' values if they're undervalued, and that may attract more cash to a company. A great example of this is Apple. Apple's just reached over $1 trillion in value, the largest company in history. And a few years ago, some investors wanted to push them to return value to shareholders, increase that cash flow through share buybacks. And what that did is it increases the ability for Apple to take on cash for investment and increases the company's rate of growth. And that means Apple's as successful as it is today. And a successful company is able to hire more workers in the future. A successful company is able to create better products and lower prices for you.
Not everyone is such a big fan of stock buybacks being the rule of the day.
Mm-hmm. Well, there are valid criticisms of the way some companies are pursuing stock buybacks. Not every company can pursue it the same way. I gave you the example of Apple that does it really well, but if you're a company whose management is missing its sales targets and you want to get your bonus, you could also do that as a way to hit that target for earnings per share. You can go to a bank, take out debt because interest rates are low, buy back some shares on the open market, your stock price goes up for a couple of days, and you get a bonus. That's not to say that every company is acting like this. You can have nefarious managers at certain companies, but that's not criticizing the system as a whole.
As money becomes more expensive to borrow, as the Fed hikes rates, I wonder, will we see fewer buybacks perhaps?
It's completely possible because there's something called leverage buybacks where you're taking out debt to purchase back your own shares, which is transferring control of the company. Because even when a company needs to raise money, it can either issue shares or it can take out a loan. Sometimes management thinks, I want to retain a little more control, and so I want to make more decisions without being accountable to shareholders. And so they can take out this debt to do that as well.
I wonder if, as we look in the next decades, as all of us are in the workforce, if we can expect to see companies continue to invest in us, whether through raises or infrastructure or better health insurance, or if we're going to continue to see some of that money diverted to stockholders instead.
I think we are moving towards an economy where a lot of the companies are leaner on assets. A lot of them can just have online presences, for example, and therefore they can spend more on very, very skilled workers. And they are taking these initiatives to provide their workers what they want because you need to have skills. But that is the major point of it. They're vying for very skilled workers, which means that you have this competition to be a more skilled and attractive worker.